Hey everyone, welcome back to the channel. So today we are diving into one of the most powerful and beginner friendly tool in technical analysis, that is moving averages. We'll cover simple moving averages, exponential moving averages, and we'll see how we can combine moving averages with different strategies like price action and supply and demand. So first thing first, what is a moving average? It's simply the price of an asset over a period of time, and it smooths out the price data to help us identify the trend direction, which is like very critical in trading. So there are mainly two types of moving averages. One is simple moving average, that is SMA, and another one is exponential moving average, that is EMA, and these are the abbreviations I'm going to use in this video. So an SMA calculates the average price evenly over a chosen period, which means, or for example, a 20-day SMA just adds up the 20-day closing price and divides by 20. On the other hand, the EMA gives you more weight to the recent price. So that's why it reacts faster to the price changes, and which makes it better for short-term signals. So now you must be thinking, which one should we use? So we are going to use both of them because SMA will be using for trend direction and EMA will be using for small short-term trading signals. Another important thing to note here that EMA works only in trending market, let it be uptrend or downtrend, and it doesn't work well in a sideways market. So let's go to the chart and try to understand how it works. Now you see three lines on the chart. The blue line is for EMA20, the pink line is for EMA50, and this green line is for simple moving average. So the simple moving average we will be using to identify the direction or the trend of the stock. So if it is green, then it means it's in uptrend. If it's red, then it means then the stock is in downtrend. And if it is oscillating between green, red, or red and green, then it means the stock is in sideways trend, like in here. So here it was in uptrend, now red, green, red, then it means the trend is sideways, as you can see from the chart itself. Another important thing to note about exponential moving average 20 specifically, whenever the price is above EMA20 and it approaches EMA20, then EMA20 will push it upwards for no reason. And same thing happens, like you can see here, this was the first instance when the price came here, it just pushed up by the EMA, then again it tries to come down, then it was again pushed up by the EMA, and that keeps on happening like this. And same thing happens if the price is down or under the EMA20, then in that case EMA20 pushes the price further down. For example, like here the price is below the EMA20, then whenever price approaches the EMA20, it just pushes it down. And the reason behind this behavior on both the price when the price is up above EMA or below the EMA is because algo traders use EMA20 and their orders triggers whenever price reaches or approaches the EMA20. So that's why it just shoots up or goes down for no reason, but the algo traders executing their trades. So now we are going to learn about a strategy which is moving average crossover strategy. So in this strategy, whenever a lower time frame moving average crosses above a higher time frame average, for example, whenever EMA20 crosses above EMA50, it's called golden crossover and it's a bullish signal. For example, here we had a golden crossover, and you can see from here until here price moved in up direction because it's a bullish pattern. Now it's a bullish kind of crossover. And if we talk about in terms of absolute increment, then the price moved up quite significantly, like 54% from the moving average itself. So now we'll see the other way around, the death crossover. Another crossover is death crossover when the EMA20 crosses below the EMA50 or lower time frame moving average crosses below the higher time frame moving average. and then we call it a death crossover, and it is a bearish pattern or a bearish signal. So here again you can see the price moved from here until here, or again in absolute numbers you can see by almost 35% price came down. So you can use these crossovers, this crossover strategy, where you have golden crossover here and death crossover here. So this is one of the strategy. But sometimes you will realize that EMA20 or EMA50 doesn't necessarily always stop the price, and sometimes it just crosses below it, and in those cases if you trade thinking that price will move up from here, then you will end up losing money, or you simply hit your stop loss. So what you can do in those cases, you can combine it with different strategies, as I said, like price action or supply and demand, because in that case it gives you even more confidence, because you have two confirmations here. One is your EMA, and then second one is whatever different strategy you are pairing it with. So for example, here I can see there is a good demand zone. There was a good demand zone and price was coming to EMA. So which means it gives me more confidence that price will definitely move up from here rather than going down by crossing the EMA20. So that's what is happening. So that's how you can use it. So a couple of things now. So you always trade in the direction of higher time frame trend, because if you do it otherwise, then there are high chances that your SL would be hit. And always pair exponential moving averages or moving averages with some other strategy of your choosing. So that's all, that's the wrap. And moving averages are like very simple, but like very effective if you can combine them with any different strategy like price action or supply and demand. So like this video if you have learned something new, and don't forget to subscribe for more quick and practical trading strategies, and drop a comment if you want a part 2 where we can go deeper with live examples. Until the next one, take care and bye bye.